And good morning. It's the 6th of February, 24. Overnight trade has been pretty much rotational. We've now been able to bring it up. This is yesterday's RTH. This is overnight trade, and they're now up here to the top of the value area from yesterday. So the open type will be higher, but within range. Higher than close and within range of yesterday. That's how the statistics work. This is the micro composite chart showing yesterday's trade. This is the NQ, and this is a market profile, obviously. ES. So we have higher in range. And now I will put in the statistics here from the IRT study. I'll show that to you here. Boop. This is the study where it only looks at the probability of these price levels being taken out during the RTH period with these open with the only difference being the open configuration. So here's higher in range, higher out of range, which is gap up obviously, lower in range and lower out of range. That's it. So in other words, of 2005 days of the total data set, this sample is 571 days, which is 28.5% of the time we opened higher in range. And of those days, the overnight point of control was taken out 83.2% of the time, or 475 days. That's all there is to this whole statistics story to do with the price levels. So I will now take these numbers and input them manually over here because I kind of like to do it manually. It resonates with me better. But I will give you an example of how that works. So this is 83.2% of the time. The overnight POC will be taken out in a higher in range configuration. And I'll continue to do that for some of these others. The overnight mid is 77.2. Oops, I didn't do a very good job of getting that one on target, did I? There we go. Oh, damn it. I got that all balled up. There we go. Let's try this again. 77.2. There we go. And now I'll do it for the rest. Overnight high, overnight low, all of those ones that I feel to be pertinent. The overnight high is 74.6. And, chances we're going to get that are, I'd say, pretty likely, considering we're just a heartbeat away from it at this point. $49.6 for the low. Then let's see, previous close is 69.5. And that's how these go. There's no stat for settlement, but pretty darn close to the close. previous mid, value area low. I think that's probably the value area high. Yeah, it is. Okay. Previous value area high is 71.1. So that's right there. And previous value area low, 55.7. Well, I can't. Yeah, I can. And these high volume nodes are pushed from levels on my IRT micro composite chart. This naked volume point of control is yesterday's RTH volume point of control. So that's probably a previous RTH high, previous high. What? Huh. Previous mid is 70.8. That's kind of surprising. And these numbers don't change a hell of a lot because the data set is over 2,000 days. So it's not it's not a dramatic change. For example, let's just look at these are in range, both higher in range, lower in range, right? So the overnight point of control for in range for where we are today, higher in range is 83.2, and if it's lower in range, it's 84.6. So it's not exactly, and actually lower is 84.7 and higher outer range is 79.9. So there's a little bit of a difference when we get into a gap up situation, but it isn't dramatic from day to day or opening type to opening type. Once the data set gets to be large enough that it smooths out the numbers. And so that's where we are. Now I'll get ready to push my morning post here to the T Lab, which I do every morning early in the morning about 6, I post the numbers that will be reported during the day, and also in this case, a period of time was earnings season and earnings. And then at 8:20, I post this chart here to just kind of give folks that don't have IRT or all the different same kind of charting a little bit of a heads up. Shows overnight, regular, specific stats to do with each one, a whole list of levels in case somebody's wants to plop those down somewhere, keep track of them. And people seem to, so that's what I do. Try to contribute a little if I can. So many people contribute a lot, so I figure if I can contribute a little, that's all the better. And I will do that in 5 minutes. It's 8:15 right now. Basically, rotational day. I mean, rotational, ETH. Okay, 8:20 here. So we'll push this out and be done with it. Okay, and now go back to our preparation for the open. So when the market opens, I'll change the configuration on the IRT charts here from full session to the day session. It's real simple to do. Obviously, just click that button and away you go. That ensures that the proper levels are identified and pushed across. Most of these levels are pushed across to the IRT, to the bookmap. So now we just kind of sit and analyze this. Overnight range is extremely compressed, 55 to 71. 15 points. Real compressed overnight range. This is the full session VWAP or volume profile, which is here. This is the RTH volume profile. So this will reset here at 8:30, this one. As will this one, which is the chart volume profile. And what that means is this volume profile is representative of what is displayed on the chart, whether rolled in or rolled out. Okay. Go out there and it's just this little bit of consolidation is plotted there. But obviously that's not the right thing to do, but you see the point. And trading right up to the top here. Obviously, as pointed out earlier, the overnight point of control is the highest statistic every day for a target. So that's always kind of a flag to let you know which way the market's trying to move. And in this case, we have very few targets above, but lots of identified statistics below. So let's see what the heck happens here. Okay, been quite a volatile few days with the earnings, FOMC, decision not to lower rates in this next meeting. There's the ever-present political drama unfolding in America, and geopolitically, a lot of stuff on a lot of impacting potential news drama out there. So best to be extremely, in my view, cautious and only trade structured setups, which hopefully have been vetted, meaning that you've captured enough instances of that particular setup with its required criteria to have a statistically significant data set and verified to yourself and myself that that particular setup has an identified positive edge. Otherwise, don't take it. And that's what we'll do here. Four minutes, still the open. So a fairly narrow range overnight, within range from yesterday, would tend to suggest that we could be doing a mean reversion, which is outside in. In other words, these guys, I mean, just at the open, you might expect that some of these guys that are long across the entire overnight range would be looking to take profit. So that could be some responsive selling. But in general, the trade would suggest that it's going to be mean reversion, which is outside in, outside in. The mean being the VPOC. Or on Bookmap, outside in, outside in. This is actually arguably outside, but there's no range there. For my setups, I use the multi brackets. This is the 2-lot risk neutral configuration. 12 tick stops for both contracts. First scale is at 12 positive ticks, and the second scale I just have set at 24, can be moved. Notice that there's an idiosyncrasy of this market, of this multi-bracket. You can't have both stops initially set at the same number. So I set them apart and generally move them together. Or, the minute you put the trade on, you can move them wherever you want. You can have them stacked together, whatever you want to do. I oftentimes leave them as they are. And it's kind of interesting to note how many times the 12 ticks will be stopped out and the 13 ticks will not. I don't have a statistic around that, but it's like, damn, you notice things like that, or humans do that stuff. So anyway, that's where that is. I then enable the trading function here for both, which means keyboard and chart. So I could trade with a mouse. You see the little dollar sign there? That means between this line and here and the book numbers I could trade. We've just opened. So there we go. I enter with a keyboard and I move stops and targets with a mouse. And There we are immediately trading up. This muted yellow line here is the overnight or full session VPOC. And the more bright one here is the RTH session or the current session. And we see that we have the current session VPOC up here. So I'll put that marker in there like this. And I will continue to do that through the day. It's easy to see where the VPOC is right here at the open and for the first few minutes, but after the day progresses, that'll scroll off the screen. And so you can just have a quick reference over here. On Bookmap, it's automatically tracked on IRT. And so much for my theory of responsive selling. I guess, huh? I've now gone to a screen which will just show Bookmap and not all the pop-ups behind, nor the white and taskbar, stuff like that. Just give a little more focus to just the Bookmap. I think that's better for me anyway. At this point, chances, remember now that this is the highest probability target. And it's opening swing high. And I guess you could sort of say that this VPOC migration lower and the test of that would be a structured trade. Lower, you see a lot of sellers stepping in, and the target would be this price check at aisle 3 down here, or the overnight VPOC, which looks to me like they're going to take out, and that would have been close to range, because this, if you took this one here at 72.5, you need to have 3 points or 12 ticks to the first scale, and that scale needs to be ahead of any kind of obstacle. So you wouldn't, you'd have been right down here. You'd have been scaled here at 68, actually 69. So very little meat on the bone. Your targets it's typical for the morning. It's a very close range, right? Even in the terms of a mean reversion, it's a very close range. We're talking about 8 points or so. Right? Yeah, so I can't put my flag here because it's under my statistic. And, I'm not that OCD. Pretty close, but some of these guys I see on the T-Lab, they've taken more trades by now that I take in a week. It's crazy. I mean, everybody's different. That's probably the major take home message about trading is it's completely random. The probability the very next trade is 50-50. I don't care what anybody says or how many losses or wins you've had in a row. And there's no absolute right way to trade. I mean, some people, trading like they're killing snakes and have 3 or 4 trades off in the first, 2 minutes. And some people look for more of a range, larger targets, which is what I do. There's no right way to trade. Everybody's profitable. And of course, it's a zero-sum game. So when I take a long, somebody thinks it's going up because they say, I'm sorry, when I take a long, somebody thinks it's going down because they sell that, right? It's a zero-sum game. There's 2 sides to the market and they're both buy traders. So that's something you need to keep in the front of your mind all the time, or I do. I haven't taken out that EVPOC yet or any of the targets lower. He's now set to the regular trading session. There's no lags. And you see that it's just, we have pushed lower. We've extended the IB lower so far, but pretty much just a compressed trading range. Yeah. And here we go. Here we are. Wow, there's some considerable buy delta. These bubbles here are delta. So green means it's buy delta. It's not sure what the hell that's all about, but wow. Not terribly large numbers though. So, and still a very compact range. My thinking about all this is to keep ever present in my mind that the most important goal of any trader is to preserve your capital and be able to trade tomorrow. To the next step, then I have to have the required amount of range from my first scale or risk neutral, and then common sense to the second target, right? So that you get 2 to 1 minimum, say, risk to reward. And what are you going to do in this range? There's POC, there's the mid, and there's the VWAP. Incidentally, the only lines, I don't use any indicators. The only things on my chart are, I guess, the only really you could consider it an indicator, calculated indicator is VWAP. Mid is just the middle of the damn range, and VPOC is the price at which the most contracts have traded. This blue line is just a consolidated or correlated market, and that's representative of the price movement on the NQ. Obviously, it's not the price. The NQ is trading at 17,000, right? So the price doesn't mean anything, but it's the movement that's correlated. A lot of buying here and nobody going anywhere. That's interesting. So I would suspect here that with all of this buying delta happening, price better start ripping up pretty quick, or somebody's going to have a real sad look on their face if these sellers step in and go, no, you don't. Thanks very much. Kaboom. Here is yesterday's RTH high. What's the stat for that, just out of curiosity? Oh, where are we? We were I got to open up that other screen. Yesterday's high, previous high is 55.8. So not anything, no, any great shakes. Yeah. They are just tightly consolidating over the top of the overnight upper distribution right here, right to the low of it and to the top of it, almost to the tick. So this is the IB high and the IB low, which is nothing more than the high and the low of the first 1 hour of RTH trade. Period. You'll notice that now the POC is up here. The RPOC, VPOC is up here. Previously, it was here, right? That's why I mark it with the naked volume point of control, which we have not taken out yet, incidentally. Nor have we taken out the overnight point of control, which is right here. So there, it's all pretty close, right? Globex VWAP, a lot of stuff stacked down here, but look at these guys buying the hell out of this thing. What is up with that? Don't know. Now, if I can remember to mute off when I have a drink or something to eat. Yeah. My guess is that they are just going to trade hell out of this thing. Now, there are no real news events this morning, but there's a couple of FOMC speakers. One's at 9 and one is, I don't have my investing.com activated on my trading machine. I try to not have any software on there really that I don't, have to have. So the EIA short-term energy outlook is at 11. FOMC Measure speaks at 11. And then Kashkari speaks at 12. And that's it for numbers. And of course, earnings are before and after the market hours, regular trading session hours. So that's whatever earnings report we were going to have this morning are done and dusted, and then we don't have to worry about any more of them until this evening after 1600. And they usually get them in between 1600 and 1700 Central Standard Time because that's the down period of the market, right? The overnight or full session opens at 1700 and the regular trading session closes at 1600. Central Standard Time. Anytime I talk about time or you see it on my screens or anywhere, that's Central Standard Time. Down here, this is market time, and this is Central Standard. So they got the lower probability of the previous high. Go figure. And they have extended the IB high now several times. We are not in any of the IB stats. There's a new stat that's been developed by a fellow at the Traders Lab, which is the old-fashioned original IB stat says that there's a very high probability in the mid to upper 90% that either the IB high or the IB low will be taken out in the regular trading session hours. Remember now that the IB high is the high of the first hour, and the IB low is the low of the first hour. That's all it says. So someone figured out, well, okay, so they calculated that what we call now the IB 30, which means that the high of the first 30 minutes or the low of the first 30 minutes have a high 80% chance of being extended in the second 30 minutes. And I suppose if you wanted to get goofy about it, you could, get it down to the first minute and the second minute. But, that's the, you have to sort of be realistic about it. And that's a pretty good stat. So that's the IB 30 is kind of the thing I start looking for first if I haven't seen some directional movement and felt a good opportunity to get long. Now, one could have said, I didn't, that this buying delta was signaling a mean reversion. The problem is there's not enough scale or range between here and here, right? I've got to have at least 3 points to the first obstacle. And by rights, the first obstacle would be the overnight point of control. Then there's the POC, which is the mean. So then where the hell are you going? And then after that, well, it's a crapshoot. So, in other words, no trades for me yet. Just narrating and watching, which is, I think professional traders, it would be a good thing to ask a couple of guys, I guess. But for me, for sure, I spend much more of my day watching than I do trading. I think that's the way to go, especially if you're looking for bigger targets. On the other side of that coin now, if you were convinced this was a mean reversion day, when this previous overnight high was taken out and the IB high was extended just up a little bit there, there's no real fuel above that. Fuel being stops. And so there was a reasonable amount of range from here, say, to the VWAP mid VWAP at VPOC. But still pretty close. I mean, it's 5 points all in and would be 5 points in now. But you'd have to be really good at your entry right here. And there's this liquidity sitting here and this liquidity sitting here. So that's kind of, from my point of view, that's not really qualified. There's not enough meat on the bone, as Tom likes to say, for that trade. And, here we go to the other side of the mean, or they surprise all these guys that think up is the new is the new orange or whatever, and get hammered, right? They catch all these longs offside and down they go. Remember that someone was selling to all these guys. And those people that are selling, if this is retail buying that's being sold by the higher time frames, deeper pockets, and at some point, they're going to decide that it's time to go down and take their profit, because essentially they're shorting all this way up. Now they want to get their money back and make some money on it, so they'll take it down. And they'll use all these stops as the fuel to do that. And you see the day's trade so far. I couldn't get that out. Rotational, test up, back down here, and now bounce off again. NQ is taking out the low and looking lower, it would appear. Over here, the correlated NQ is clear off the screen. Yeah, so the rotation continues, and the range remains compressed. 11 ticks, essentially. 10 and a half points. Sorry. I'm not used to doing this verbal narration here. Good practice, I guess. Probably good for me. The idea of the stream is a video journal, of course. All the usual disclaimers and stuff apply. It's for my benefit as I've got a couple of different journals. I've got a local Excel one that I built long ago, and I've got one I have access or an account with the Journalytics from Jigsaw. But this is so much more convenient than either of those. Those are great for historical data and vetting trades and seeing the statistic, determining your statistical edge on setups and things like that. But this is, I can replay these and see what I see or see what I was seeing. And by this narration, hear what I was thinking. And that's a huge benefit. Highly recommended. And this is captured with OBS, which is free. So, free's good, right? You don't have to live stream it. If you can just record it also. I live stream it so that I can use other devices to monitor it, like in the car, via my phone in the car, if I'm going somewhere and listen to what I'm hearing or whatever. It's just I don't have to be at the computer. If you record it, then you could put it on Dropbox, I guess, and still do the same thing. But YouTube is so much more convenient. It's just easy. And therefore, that's what I do. Now we're testing the low a couple of times. We still haven't got that EVPOC out, or the naked volume point of control, or the mid, or or the overnight low. So there's a lot of numbers below there, and I think they're probably going to make the move now because NQ took out the low, bounced up. They are definitely flirting with these targets down here. Now there's no place for me to get in here because there's absolutely no range to the mid. And there's, I don't trade from the mid out. That's contrary to, first of all, the principles of mean reversion, because it's, the mid, the POC is the mean. And it also flies in the face of don't diddle in the middle, which is, a well-earned and respected principle by traders from ever back into the market profile days. It's just common sense. The VPOC is the most highly traded price so far in the session, meaning then that the probability that it will be retested is higher than any other price. So, there we go. That's why mean reversion is a successful trade style or a successful theory in a rotational market, because it's going to revert to the mean, which is the POC. So they've got it. They have got the target right here. And now again. And I would suspect looking lower. Once they get some momentum down there, they're probably going to get some traction. Yep. Yeah, so I don't know what I could have. I guess the fancy guys are saying, well, I saw this up here and I took the mean reversion short and I'm still holding my target for down here and then here. And that would be an ideal situation, but I certainly didn't see that coming. We're now at 9 o'clock. So the IB30 stat is on the table and it's already been taken out. It's right there. and it's going to be extended further. And so that stat has been essentially satisfied. Yeah, disappointingly, I don't see a way on here for myself. Oh, which is, the case. At the moment, we've seemed to have broken out of the rotational market and are looking lower. Whether that's going to turn into the direction of the day or not, point out this is a big up move on the FOMC. Look at the range here where we extended the micro composite high upper limit higher. This is yesterday. Big range, good size range there. Here we are today. Highs almost at the exact same spot. And just a couple of ticks higher. You can see that, which you can see right over here. This was the previous high, and there we are. 2 ticks, right? And looks like lower is the move du jour so far this morning. Now, and unfortunately, there's no way on that. Any short I would take at this point, unless there's a counter rotation back up somewhere to a level that would mean something to me, would be a breakout. And I've in my plan, that doesn't my trading plan. That's not a trade I take. I actually mark them as FOMO. Oh, I have several error tags, and that's an error breakout. I think it's important to keep track of the errors as much as it is everything else. Be surprised how many. If you just got rid of one of those, what your profit factor would look like. Can be very surprising. Yeah, so this is kind of irritating, just a grind down. And for me, I'll have to start looking at things like this little distribution or fractal here. Are we reverting around that? This becomes then the VPOC for this microstructure. And it, we've tested up here and then sold down. But it's real easy to see patterns and grasp at straws. And a lot of, again, it's just everybody's trading system and plan is personal. So if you're more of a scalper type and active trader, I just didn't have much luck doing that. Net, had some pretty good days and then didn't. And the only person that I think ever really is really tickled about that kind of trading usually is the broker. Just, commissions are phenomenal. Yeah, so running out of levels down here from the overnight. That's interesting. The last of which would be the overnight low. Testing this IB low about 3 different times now. This IB is not set until 9:30, but the IB 30 stat keeps getting pushed out. Got pushed from, it was there. It got pushed here, got pushed there, got pushed down there, gotten pushed down here. Now it's getting pushed down here. That's the IB 30 stat being bounced around to the low side. And real tempting to take a, short in here and look for the breakout and all that kind of stuff. But it doesn't seem to work for me. And it's certainly a profitable, breakout trading is a momentum or breakout trading is profitable for a lot of people. I mean, that's the whole premise of the famous Richard Dennis turtles, that made millions of dollars. 12 guys or 12 people or something. He took 12 people that had never traded before. I think his partner and he had a bet or something that they could trade. They could turn ordinary people into successful traders with the right rules. And so they put an ad in the Wall Street Journal and got a bunch of people from around America, 12 of them. And the rules or the strategy was breakout, as I understand it. Obviously, I wasn't one of them. And really, really successful, and some of them are still fantastically successful traders, or now running their own fund or whatever else. I suppose Richard Dennis probably dead. I don't know. Interesting story. Called the Turtles. Why they call them that, I don't know. I've probably heard, but I don't remember. Slow and steady wins the pace, I guess. Now we are at the bottom here, babbling around the IB low, just above the low volume node and the overnight low. And getting to a point where the direction could likely be lower and a sell-off. But in reality, it's more appealing. There's more range and validity to mean reversion type trade with targets above, because you've got this is a pretty classic asymmetrical setup. Very little risk, very little distance to where you're wrong, and targets and mean above. That's the idea. Well, I've never lived here in Texas before, but the air quality sucks a lot of the time. It's just really killing my eyes. And there's that buying. So we had 147 stops come out right there. And then no real exhaustion because it's no test down that I can see. Not sure exactly how this is working now. I changed these configuration a little bit with the heat map just to kind of see how that plays out. And I'll be right back. So 930 will be the IB set. And this mean reversion here off the low looks quite appealing. I was busy not paying attention here. Buyer stepped in and up she went for mean reversion to, and then there's the mid VWAP, overnight BPOC, and the current session BPOC. So there's lots of targets up above there. Not sure how that's all going to play out in the wash, but anyway, yeah, too many things going on at the same time. Yeah. Yeah, so I'm hopeful that this thing, it's really funny how watch the market, you leave for a bio break or fill a water bottle or whatever else ensures the world. That's exactly when things change. And my guess is that they're going to take it up to test those values, but you know, we've had some pretty erratic days lately where that's kind of been the case. They'll trade it up, then sell it off hard, and then bring it back to the top, and just trading it, right? And that's the norm far more than trend day. I don't have the statistics, so I won't quote one, but I've heard the number more than once and I've just never bothered to look myself. But supposedly there's a very high percentage of the trading days are rotational. Much higher percentage than are those which are trend days, direct or directional. And makes, from experience, standing here, watching the screens, that sounds believable to me. And now they're going to do something to it here. I don't know what. IB 30 again, I guess. I didn't like that. Lots of stuff sitting down here at the IB at this previous value area low. Now, the value area low is from yesterday's regular trading range as opposed to the developing value area low, which is living around here somewhere right there, which is the current session. So there's a high volume node in the value area low, and there's a 55% probability they're going to get to 50 here, and a lot of liquidity laying down there, which could mean exactly nothing. Or it could be the truth. 1,748 contracts. Wow. That could be a market mover, I guess. If those stops all went off at the same time. kind of the theory about what we're doing here a lot is just trading to stops, to retail stops for fuel. And that's the analogy for it. Those stops that are sitting down there, for example, if they trade down in here and there's actually 1,700 stops, which would be sell stops because that would be longs, right? Well, what's that going to do to the market and price action? It's going to take it lower in a big way. And that's the theory. I mean, real simple analogy, or version of it, but that's kind of it. Where is retail got all their stops? They're pretty much the people that provide the fuel. I'm going to step away for a few minutes here, but I will leave the stream running because I don't want to take any trades. I've made a commitment to myself and I would not take trades off stream. And so I try to leave it running so that should a opportunity present itself. And unfortunately, the next structured trade that is kind of on the table would be the IB statistic or the IB 60 statistic, which would say that right here at 9:30, then the IB low and the IB high would be set. They would no longer move. So the statistic would be on the table, and that would say that we would take out the IB low. Now there's a lot of some liquidity here to get kind of in the way, and it would be the low of the day, but it's a high probability statistic. So 59 to 56, 55, right within the scale range. The only problem with that is, in my view, at this point, in the middle outer space, what's up above here? What's to say why we quit here and head down there? So, yeah, anyway. And there we have the overnight VPOC shift. And likely that we're going to get the, right up here, we'll get the full session shift down to about this area right here, this 5175-ish. 9,000 contracts, 9,500. And now it's quite likely that we would have the structured trade VPOC migration, which is that price may come up here and check out these levels toward this low volume area, but because of the VPOC migration, says that all the traders are accepting the fact that this is now the fair price. So it's quite possible that we will get a continuation lower to check out this overnight low and who knows what. We'll see when I get back. Unfortunately, I can't be here. Well, so it seems that pretty much what I had expected happened. We had the VPOC migration lower, and as I mentioned a few minutes ago, before I had to leave, we tested up to this mid and VWAP, and then there was enough scale there to have taken a short to the VPOC, to the current session VPOC, which is a structured trade, but it had a little bit of room past there, but not a hell of a lot. Now we're going to do the same thing here again, it looks like. This is also another way of looking at a mean reversion trade from in this lower distribution, right? And from what I see, pretty much in a downtrend, so I would not be looking at longs in this current market setup here. Let's just see what we got over here. So here's today's trade. You know, it's a pretty tough call, but we seem to be staying substantially lower. We've moved the VPOC to the VPOC lower, and we are staying below mid and just a touch up to mid and VWAP here. So definitely trading the lower distribution, same way with the NQ. And as a result, then, in my view, I wouldn't think about longs. They would be not in my trade plan at the moment. It would be shorts like this test here would have been a nice one had I been here. That's, and that would be right here. So you take this short, or also a viable one would be this test to the VWAP. You know, you mid, down, test to the VWAP, and then short. So that's a structured VWAP to VPOC, and that's 4.5 points. So that's within the scale range ahead of the VPOC. It would be then a trade within my plan. Again, didn't take it, wasn't here, but yeah. And I believe I described that situation when we had the VPOC migration right here just before I had to leave. And this was the, we have not taken out the IB statistic yet, which is the IB low, or wherever it went. Up here somewhere, the IB high. So the IB 60 stat still remains open. And let's see what else. We've taken out the biggies, the EVPOC and the mid. We've taken out the previous RTH session close and settlement. It's not a statistic, but anyway, we still have the IB low and the overnight low on the table, but there's a substantial pile of liquidity living right here above them at the developing value area low. So if I were to take a trade there, I would definitely want to be scaled ahead of this location. Well, from here, I would need to be scaled before the VPOC and then target the developing value area low first, depending on how that worked out. Look at the IB low and the overnight low. That would be my thinking at this point. It's so funny. It's when you have to suddenly, you're focused and into the market, then you have to suddenly break away and go do something else. I have to jump in the car and drive my wife over to her college and back. It's only, I narrated this VPOC shift just before I left, and here we are, which is essentially just a little rotation back and forth. But It seems so strange now to get back in the groove. Back in the groove. And it's not out of the possibility that we will turn the tank around and trade it up to take the IB high. That's happened way more than once. Way more than once. I'm not saying that's what's going to happen now, but just been a pretty much rotational day, except for some of these, this movement down from the IB high when they pushed that up around 843. So that was not even the IB 30 yet. IB 30 stat was taken out right here. Well, right here somewhere at 9 o'clock, because it happens at 9 o'clock. And then 9:30 right here. And we have yet to take that out. So we've migrated the VPOC lower. We've pushed the IB low down, further down than we have done the IB high. But we have yet to take the IB 60 stat on either side. I think that pretty much catches me up to where I need to be here. I put the wrong keyboard. Yeah, so okay, VWAP mid. We are at the outside edge of this lower distribution, just below the high volume node. Unfortunately for me, I'm not convinced that we're going to get lower ground here. VWAP to VPOC is a trade, and with 66 to 62. So there is plenty of range for that trade. I'm just a little afraid of what fuel lives above here, and I realize that that's not the correct way to think. The idea behind the whole concept of trading statistically, the gaming theory as a casino does, and vetting your trades with the volume, with the journal that I've made available, et cetera, is that once you determine that a specific setup with the specific criteria required is met and has a positive edge, you take every instance that trade presents itself. In a casino, they deal a blackjack hand every time the cards are shuffled. They never stop. They never change the rules. They don't do anything. The whole purpose of that, the whole thinking or logic or methodology is the law of large numbers. And which is very simply that if you have a 5 or 10 point positive edge in the sample data set, you want to increase that sample data set as much as you can, take every instance that you can, and the percentage of the positive percentage or edge manifests itself in your account. That's real simple. And in a sense here, I'm not doing that because I do have a VPOC, VWAP to, mid VWAP to VPOC trade that's got that has been vetted, has a positive edge. In this case, it is down. It's a short, right? And I was just talking about the fact that the market has been consistently short pretty much of the day. And I should be taking that. But I don't know how to explain it other than I'm a wuss, maybe. I don't know. But, I'm thinking now that the tanker is turning and that they may go up and explore higher to that at least developing value area high, which is here. That liquidity just above it or just in front of it. Sorry. And then they could go up to the upper distribution for the IB high. And that's not correct. I should have taken that trade, but I'm not going to do that now. And I can't really explain that, but yeah. And I'm not going to take a long now either. So I guess I'm just on the fence. And I will have to look at my statistics on that, which I can do. Unfortunately, not on this computer because the trade machine doesn't have any Office products on it. Only my chartings, Bookmap, IRT, Jigsaw, which powers I don't trade on Jigsaw anymore, but it powers my the Journalytics, and Rhythmic, of course, because that's that's where the data connects. What else have I got on here? Well, Chrome and the Logitech G Hub for the headset and mice, which are both both mice are wireless, but the headset is not. And then I have OBS, of course. So no Office products here, Excel or those kind of things. Yeah. Where am I? Oh, back over here to Bookmap. Yeah, so we tested up to below the developing value area high. We're down at the mid now. VWAP below that, and the VPOC down here. Could be a opportunity for a short, a structured short, lower. I'm just not convinced that the time of the day and with the previous day's action, seems like we do this frequently, get everybody looking south, and then they flip the boat around and head to the north, and it could very well be. Now, had I been real Johnny on the spot and taken this test short at 68, 66, well, there's only 2 points. Got to get below that VWAP in order to down here to this low volume area in the chart profile in order to get the scale off. And it is typically retail behavior to, if price approaches the mid and VWAP from above, it's typical that they buy it. And vice versa, if it approaches from below, it's usually typical that they sell it. Tom B has a saying, think like a retail trader, don't act like one. So that's a pretty good idea, I guess. And it's entirely possible that I am too conservative these days, or gun shy, or analysis by or paralysis by analysis, or pick one. I am generally profitable, so I guess that's what counts. And then the idea is to just increase the risk reward, and the amount of profitability is that's what can vary. Sounds like, if I see the mic meters here, it sounds like my other machine, who is monitoring the Trader Lab, Tom B's presentation here. It looks to me like that audio is bleeding over. I'll have to check and see closely, and then just keep this muted off, except when I'm going to actually talk. Yeah, it seems like so. So I'll mute. I'll flap on the be right back and mute, and then if something comes up, I'll try to narrate it ahead of any kind of trade entry or something. See what's happening here. If you see what's happening here, we are just basically consolidating in this micro composite or micro fractal, whatever you want to call it. Better way to look at it here, perhaps, is above the VWAP and right around the mid. So they haven't been able to really get any traction out of this lower distribution or the value area, because this is developing value area, the blue delineated by these, or bound by these two blue lines. So they can't quite get out of that. And now they're going to poke their head down under the VWAP, it looks like, and head to the POC. So if a trade mid to POC had been put on, it would have been a nail biter right here. In fact, you would be taken out. Wow. Within a tick. Boy, that's tough. Depending on how spot on your entry was, it most likely taken out. And if not, would be scaled just now to the tick. Yeah, it's too close. You know, that's this is not precise surgery. Trading is random, and it's definitely not precise. And it's so easy to do what I referred to as RMT, which is rear view mirror trading. That's the strength or the forte of so many of the online guru types that never post anything live or real. Who cares, sim or live? I mean, I'm sorry, who cares if it's, sim or actual real trading? Is it live? Really? Even that is a hell of a difference as far as I'm concerned. Live, of course, is different than sim because of the fills and the things that can happen around that, But, these guys that don't ever post anything and go, well, yeah, see, I got long right here, and because I saw it drop down, and then I tested up here, and now when I saw this retest here, I got short. It's just RMT, it's just complete and utter BS. Meaningless. And it's amazing to me the number of people that fall for it, or that just, drink it up like Kool-Aid, man. It's crazy. Which brings me to something that I think is worth putting forward here. The only one of those places that I spend any time at now is called the T Lab, and that's it's called the Traders Lab. It's a bookmap Discord chat room started by a guy named Tom B, like Bravo. He's been trading for 40-something years. Seems like the real deal to me. Most of what he says resonates with me in terms of risk management and setups, and how trading is a probability business. Not a trading business is a probability business, not a video game or gambling. So that's definitely a place I could recommend. You don't have to be a Bookmap subscriber, but of course you do have to join the Bookmap Discord site or whatever it's called. And there's a link on the description of this stream to do that. And the guy's name is Tom. The room is called Traders Lab, and the guy's name is Tom B. B like Bravo. I don't know what his last name is. I have no idea. So I think it's the real deal. And I will say, he's never posted any trades. He doesn't call trades, and he never posts his trades or anything else. So, I guess in theory he could be BS too, but most of what he says rings true to me. And some people do post there. And of course, like every chat room or whatever, there's a whole pile of big shots, quote unquote, but you can also, the thing about Discord, you can filter out who you want to listen to or what posts you want to see from those people. So that's kind of good. Yeah. Now, this is nothing. Again, with the test up for mean reversion, I don't know. I suppose the first shot up here and then the retest, if you shorted in this area somewhere, or of course here, you'd be scaled just barely. They got in here somewhere. Say it's 68, so 65, you got to scale off right in here. And you'd be sitting risk neutral looking for the VPOC target and south, which, the developing value area low, and also the, which is usually a pretty good target, and the overnight low and IB low are still open. So the IB 60 stat and the overnight low And then, of course, the value area low are still open statistics. But that's a lot of hindsight there. That's a borderline RTM or RMT. Borderline RMT. And none of these are substantial in my opinion. As I said earlier, I think they're going to probably repeat the previous days. You see here, here's yesterday, or yeah, oops. Here's yesterday's trade. Come on. Okay, we'll do this then if you're going to play that way. Here's yesterday's trade. Do. Here's today. Do. See? Epoch migration lower. Epoch migration back up. Epoch migration lower. Trading higher. So I am not completely convinced that this thing is going to trade back down to VPOC or where they're going to go, and they don't have to go any place. Look at the yesterday here on the Rincos. Here's today so far. Here's today on NQ. Here's yesterday. Here's today. Yesterday was an inside day. So far, we're at a second inside day. I mean, obviously, it doesn't mean anything at this point. It's 11 o'clock in the morning, but you get my point. See my meaning. And here we go now to the POC. So that mid to POC was a good trade. And what's the difference between here or here or here or here or here or here? You know what I mean? Why is this the one that goes down? But boy, if you're RMT, you can go, well, I picked that up. It's a retest up. There was exhaustion, whatever kind of story you want to make up after the fact. And it's good trade. No question about it. No heat, good trade. I just have never figured out exactly how to go about timing those without staying through, all of this heat and or likely stops. Let's just check. Well, if you took it up in here, when it tests back up again, you would not be stopped out and would have not, in theory, really taken any heat. You would have just had to sit through, an agonizing bunch of consolidation. But now they're going to drop the sell hammer, it looks like, and head down for that IB low. And the NQ is also leading the way. Wow. Unfortunately, now for me, this would be a breakout, and so no trade. And I've already voiced my opinion of diddling in the middle, so don't need to go over that again. This is the middle out, which is not a thing to do, in my view, or in the opinion of a hell of a lot of people, actually. And I would love to have had a trade on there at any one of these points, but I just wasn't disciplined enough to have taken that short. And even this test, trade down, retest up. 62, 59. You'd be scaled right here, so you would be risk neutral. Pretty close. And then you could be breathing easy and looking for a developing value area low and overnight low and IB low and all that stuff. And if it gets through this liquidity, as I was talking about earlier, there's all of this liquidity are stops, right? They're long guys. These are all sell stops. So that's going to, if they get into that and trade it, it'll go south in a big hurry with conviction. So depending on your time frame now, you could be conceivably looking at a mean reversion around this microstructure. And now we're looking down at this liquidity. This being essentially the VPOC of this fractal or microstructure right here. This is only just because this is that consolidation right there. And nobody says that's. It's got to do with your time frame. So we continue to slop back around down here. Excuse me. That move from mid down was a structured trade and very, very viable. And I will say I missed it. But on the other hand, there's no real test, right? I don't see a setup here. Test up, unless you call this the test up or the setup for these, which is viable, or here. Oh, I'm sorry. Jeez, what am I talking about? Talking about here. And you have all of this, then you test up here. That could conceivably be the trigger for the mid to VPOC. But as I talked about earlier, what about all this crap over here? Hindsight, RMT, rear view mirror trading, baby. I can only figure out a way to get paid for that. That would be lovely. I guess the way guys get paid for it is they sell subscriptions to their, or membership to their site or whatever, and they just continually do that, and people, that's how they make their money, I guess, or, YouTube guys or whatever else. Which is, great. YouTube was paying me $100,000 a month. That'd be sweet. And when are they going to break it down and go after that IB low? Never know. The last couple of days in a row, we've been neutral days, which means that both the IB low and high, here you go, both the IB low and the IB high were taken out. You see, here's 930, 929 or 930. So the IB low and the IB high statistic, IB 60, if you want to, were both taken out. That's called a neutral day. And that's like the second in a row. So the chances of them not getting one or two of these, one or the other, pretty low, because the statistic for that IB stat, IB 60 stat's about 95%. That one will be taken out. Of course, that means there's 5% of the time that neither one will be taken out. And that is that. I'm keeping this music on and muting off whenever I can so there's no background noise. I'm bleeding through here and being irritating. Here we go. Now they're finally going to get the traction lower for the IB low and the overnight low, and you notice how the liquidity lifted out of the way without trading. Now they're going to sneak back in there a little bit. And a bunch of people that are short and all excited are now going, whoa, what the hell happened? And I don't want to be that guy. And there are those who will now be going, yes, well, I saw that coming. That's a mean reversion. And I, took the bottom, which is an asymmetrical trade, no question about it. You're wrong, right? You can put that trade on there and know you're wrong right there. All right. And then trade back to the POC and points north. But in the day configuration, as I see it, here, we're pretty much down. Consolidate, down, consolidate, down. I don't know. So I guess the real important part is, I don't know. And you never know. The thing with trading is that's the whole concept around the statistical business. You never know. You can only anticipate what you think is going to happen. and rely on the positive probability or positive edge that you have pre-identified and verified in any which setup you take. And that's the real way to do this business. I'm convinced of it. Gunslinging and, seat of the pants. It's like the gamblers on the, in the casinos. Yeah, some of them walk out the door with a big suitcase full of cash. But if all you have to do is take a look at the buildings and the hotels in any casino town and ask yourself, who would it appear is making the bulk of the money long term? And never mind, they give you drinks and show tickets and buffet. And, if you're a whale, they comp your room and pick you up at the airport, whatever else, because they know that if you bring $10,000 and they have whatever their percent edge is, that amount of money is going to stick over the long haul. So, or whatever it is, you're gonna leave money behind whenever you leave. These little liquidity vacuums like this, there's no way you can manage your risk against that. There's 99, well, that's only a point or, something, but still, sometimes they're greater, much greater than that. And there's no way you can manage that. It's, if you have a stop sitting in the middle of that someplace, you'll get a notification, where you got out. It's called slippage. Look it up. It's a real, maybe not the case so much in sim trading, but in the real markets, yeah, absolutely. And do I think that at one point today, in the next, probably before lunch, they're going to get down to the IB low and the overnight low? Yeah, I do. But I don't see a spot where I would be comfortable to jump on that ride, except way back here where I did not participate, right there, for example. And that would be for the structured trade mid BPOC, and then, the next target you'd be looking at for the runners down here. And that would be great. I mean, that would be a real logical target. That's similar to what I did Friday. My runner was ahead of any obstacles. I mean, my scale was ahead of any obstacles, and my runner went way out to the MV or EVPOC, and actually the price went past that. But I was happy with 50 or 55 ticks or whatever it was. 59 ticks, I guess. Because that's what I had set up. I didn't cry about it or whine about it. That was it. And that's the way you have to look at it. It's just one more point in the data set. And that's it. There's going to be stops, and there's going to be scratches, and there's going to be profits. That's the only three options there are. So developing value area low, they seem to be not able to get through that with any conviction. And it's only 4 points to the overnight low. So with a lot of liquidity in the way, I couldn't take a trade here for a couple reasons. It's a breakout. This is 58 and this is 56. That's the first line of an obstacle, or that's the first obstacle in the way of a short, and that's only 2 points or less. So it doesn't work for me. Among, there's a lot of other stuff. It's, but that's, at this point, that's the reason I wouldn't take something. Even though my plan today would only include shorts. They can't get it through that developing value area low. There's an old market profile idea about I don't know how to exactly express it, but that the profiles need to, for example, they would say, they're repairing this area over here, this low volume area. They repaired it here, and they're repairing this one down here. And another point is that there's excess. Now there's no excess on the high. You see how there's a taper here? And it's flat. There's no real excess up there. And so they would consider that an incomplete auction, with the possibility that they're going to go up there and fix that. And that would mean IB high. Would be kind of, I don't think anybody would be wrong to imagine that the IB 60 stat is going to be the low. But there's no law says that's it. Now they're going to maybe get through that developing value area low and get down and take the IB stat and the overnight low. Maybe. Would I want to take that trade? I don't think so. Trying to be real conservative and Probably too much so. I guess there needs to be a happy balance between taking trades and accepting, whether it's win, lose, or draw, because that's part of trading, as opposed to being perhaps over conservative with a subconsciously driven, I suppose, by not wanting to take stops or whatever else. I hope I'm over the idea of being right or wrong, because that's just ridiculous. That's got nothing to do with it. But you want to try to stack the odds in your favor as much as you can that it might go. You anticipate now here that it's going to go. I anticipate, because of the proximity here, the trend, the trade action of the day, the statistic down here, the IB stat, the 60 stat. I anticipate that that's going to get taken out. If it doesn't, well, it doesn't mean I'm wrong. It just means that the consensus of the market participants was to do something different. My theory is that the higher time frame is pretty much just picking retail pockets most of the day, and that I don't really necessarily buy into the idea that the market is searching for value. I don't think anybody cares during the intraday. I don't think whether the S&Ps are selling at 56 or 62 matters to anybody. I think they're speculators trying to make money by market movement. That's what I think. Now, I don't trade Forex or any of that goofy crap. I had a view through the back behind the curtain of that business when we lived in Kuala Lumpur, which we lived in for 11 years. Just moved back to the States a couple of years ago, but had the occasion to look behind the curtain in the Forex market. Jesus, it's just the most rigged, crooked thing you can imagine. So the futures market, I believe, to be about the most transparent and sort of level playing field there is. That's what I'm trading. But I don't necessarily buy into the market value idea that they're trying to establish value for the price. I think, sure, a lot of people recognize what we call value as 70% of the market. All these value areas are where 70% of the trades or the volume takes place. That's all it is. Okay, people can see that. They can see value area high, value area low. They can see all these different things. But does that mean that people consider that what the S&P is worth? And how could it be worth something different tomorrow? How was it worth this down here yesterday, and now it's not worth, and it's up here today? So I guess if you see my point, I think it's speculators making money, which is perfectly fine. The idea is to get trade in line with the context. That's why I'm so frequently talk about the direction and would only be a short today, and looking at the statistics of these various levels. I think that's a real, I think that's the way to do the business. Yeah. Oh, the full session VWAP migrated lower again. There. Now, what have we got here? 13,000, 11,000, 900. So say 12,000, 1,000 contracts, basically 1,300 contracts trade here. Then our full session, our regular session VWAP, VPOC will migrate there. Too much alphabet soup here for me. So they tested up towards that that VPOC, and now back down again, but they can't seem to get the traction below the developing value area low to the IB low stat. Funny. Haha, funny. Not funny, haha, but funny. The liquidity that was all piled up down here seems to have gone and found another place to live. That's nice. And probably they're going to go down, but I'm not going to be the guy that tries that. Funny how that thing just got an absolute floor above that IB low. And again with the chatting there on the other side, so I'm going to mute off. It's worth saying too that I'm not even considering a long here off the bottom for a VPOC migration, or I mean for a mean reversion, or and that's because of the context of the day is, in my opinion, down, meaning shorts only. The VPOC has migrated down. Full session VPOC's even lower yet, another 1,000 contracts here, and this one will migrate down here. Mid and VWAP are above the POC. So, yeah. And, that's doesn't mean jack. This thing could take off right now and go up and take the IB high out, There you go. And that's, you don't know what you don't know. And for sure, in this business, you don't know. You can only anticipate and if this, and narrate in the form of if this, then that. If not, then what? That's something Tom B has come up with and puts out frequently. If this, then that. If not, then what? And if we get above this POC or, whatever, I pick one, if they break down under this again, they've tested up here to the POC. If this, then that. If not, then what? I guess is how that works. I mean, obviously that's how it works, but I'm not sure those targets I was pointing out are the ones to be anticipated. What I think they're going to do here now is trade up a few more contracts so they can get the POC to migrate a little bit lower. And that may give it the horsepower it needs to get down to the IB low. Except something to remember also is they've traded right to here, right? They've actually touched the IB low, but not taken it out. That's where this was made. Okay. So this 40 traded before 930. And I guess, yeah. Doesn't say anything that it's got to go there. And, it's within a tick. Right? This right here is within a couple of ticks of there. Let's see where that was. I might be lying. Where was that? Oh, right there. So there, no. Here? I don't see where that was made. There's 830. That's the open. I don't see where that 40 comes in here. And now there's 410. So I'm not sure what the Sam Hill is going on, to be honest with you. A minute ago that said 40, or I thought so. Now it says 410. And this is traded volume. This is not the book. The liquidity here is from the book. This traded volume is what traded. And here we go back to the upside. Like I said, we could turn around from down here and take out the IBI. I don't seem to be able to stop yawning. I must have low blood sugar or something. No blood sugar. Something. Now, this is not a trade that I would be able to think about because it's 64 to the VPOC 62, right? That's only two handles. So this is just not a place where I feel comfortable to trade today. And so what? And there are many days that I don't take a trade. I watch the market and I narrate the market. And I think that I learn and develop my philosophy and plan and skills every day. But I certainly don't feel the need to have to, what's going on here? Have to trade it. And I think pretty much everybody else does trade every day, that places I hang out, which is the only place I have anything to do with trading except here myself on my screens, and now in this stream is my video journal, is the T-Lab. I don't go to any other sites or listen to anybody else. Even on the Bookmap Discord, some of the other presenters there, I don't know, a year or so ago, for 2 years ago, whenever it is now, when I first found that place because of Bookmap, a couple of them I listened to, it's like, oh man, aren't you perfect for the internet, and it just didn't ring true for me. Tom, as I said, seems like the real deal. And so therefore, that's the only site that I have anything to do with besides my screens and my stuff. TopStep has a new TopStep TV now, which got a few, John Hoagland, I think, probably knows quite a bit. Some of the other people that they have come in is appeal to me. And there they go. So now you're going to trade the POC out. That's not the thing to do, right? And you notice how the full session VPOC migrated down and then back up. The regular session or the current session POC was not able to migrate down and only needed 1,300 contracts. From now it's, got substantially more, but at one point there was only 1,000 contracts to get it to move down again. That's still not to say that I don't, that I think it's going to be a long or that the tanker has turned. There's a bunch of consolidation. Here we go up across. Now we're back over here. This is the NQ. Here's our micro composite. This is today's trade. So, yeah. And it would be just lovely to grab a fast trade out of it every day, as it's always nice. But that seems to lead to a stop. And that's kind of a phenomenon that I don't know how to deal with exactly. When the first trade of the day, because for whatever reason, is a stop, now you're 2 steps behind. And if you don't have the proper risk or enough risk reward ratio on all of the previous trades, or including the ones that you're going to do after that stop, it takes 2 trades to make it back, and you end up with $150 or something, which is 12 ticks on one contract positive on the day, but in reality you've compensated for $300. So that's the example, as an example. So that risk reward of more than 1-to-1, substantially more than 1-to-1, better than even 2-to-1, is really important, and that's something that I have to work on. You'll find yourself in a 1 step ahead and 2 steps back situation, is, I guess, the point I'm trying to make. And this is just too kind of boring here. I'm not going to trade this. And it's just slopping around and might do so. We're heading into the bottom of the 11 o'clock hour. Pretty soon going to be the noon hour. I think I'm going to be right back. Take a break here. Well, look at here now. Looks like the never got that IB low. That's pretty funny. And they're gonna go up here and try the IB high, I guess. Yeah, this kind of noise is just irritating. I mean, look at this. No, thank you. Wrong mouse. So, yeah, that was. This is quite a day here, but very choppy. As I said some time ago, I'm not gonna take a long. Now, it never did take out that IB low, so you can imagine the number of people that have gotten chopped up on that. This is we're gonna name it these kind of days I call retail soup because it's just they're just chopping up everybody. However, we've now gotten across value area, the developing value area. We've gotten across the developing value area. Still don't really have any appreciable taper at the bottom, but more so than we do. Well, no, it's looking okay up here now. Actually, it's got some taper at the top, but my guess now is that they'll trade it up to the obvious option is that they're going to go for the IBI if they take out one of the IB stats at all, which is another thing I think I mentioned earlier. So what do we got? Or what do we have, I should say. Instead of what have we got? Wow. Yeah. So we're at the $70.75 area here is a previous value area high right here. And we're testing back up to that. We're looking at a price check at aisle 3, which is euphemism for this previous value area or VPOC. And then we have the IB high and that previous it's already been taken, so it doesn't matter. Yeah. Look at that. Look at that. What a mess. This entire bunch of crap is 3 handles or less. Now, are they going to try for the mid VWAP and POC once again? Very possible. I'm thinking that this is the perfect opportunity to not waste any more stream time. Of course, the second I say that, something will happen and I will take a trade or have a setup for one and not take it because I haven't gotten the stream up and going. And it looks like that's exactly what's going to happen. As again, like I said earlier, generally when they come to these, they'll bounce. This was a small bounce here. Didn't really get a bounce at all off the VWAP. End up going to trade it down to the POC. Don't know, but it seems so. It seems that's what they're going to do. All right. Yeah, I should have. Was almost tempted to do that, but I'm still a little disoriented here from just walking back in. And one thing I've found that oftentimes if I just walk back in and see what looks good, I get spanked real good. And so I'm trying to not do that. So let's see here. 66.5 entry around there. VWAP would have been around 64. So Only 2 points. And this might have gotten down to, yeah, 63.5. That would have been scale right there. So that would have been the risk neutral scale from that mid. And looking likely that they'll go down to POC. It could, just go ripping right past there and straight down to the IB. Who the heck knows? Who the heck knows? Yeah, sure as the world. Well, look at there. How nice that would have been, eh? And I was just reaching for the trigger here, and then I thought better of it, and that's what I get, you see? But no, not at all. I'm absolutely sure that was way more than, as I said, way more than once when I come in and walk back into the office here and see something like that. I think, boom, hit into that. And, I've been stopped way more than once. Very nice trade though. Would have been still going. And now you see an entry here, scale here, pull your target. Now it would be a trade management situation where you bring the trailing stop up to here and your target is going to be this overnight low and the IB low. Pretty much the reverse of the trade I had last Friday, which worked out very well. And just you trail down to these swing highs and, keep it above this VPOC in here somewhere or leave it up here. And that's the trade management I would use. Bringing this, looking for these targets down here. Yeah, that's just pretty darn disappointing. I would have been pretty pleased with that trade. Almost 10 points there. Timing is everything. If I'd have walked in a few minutes earlier, I might have been a little less apprehensive about knee-jerk reaction problem. Yeah, can't seem to get down there, which is, yeah, whatever. I'm sure surprised. What else is going on here? Well, nothing. Nothing. One thing's for damn sure, I'm not going to try to VPOC down to the, to a price they haven't been able to break to for a long time. This, just not going to do that. VPOC middle out thing, the diddle in the middle part. These are the kind of movements that are enjoyable to trade. You're short here, boom, on the test, right? There's 143 out there, then 4, so that's kind of an exhaustion. And then it gets right with it. Immediately goes your way with conviction. And you get your scale. This kind of crap here, if you shorted up here, you're still diddling around down here and haven't gotten a scale yet, and may not. So, you're just getting, that's just tension and nerves. It's much more pleasant when it moves your way and moves your way with conviction immediately. That's a great, great feeling. Let you know that you might have anticipated correctly. Okay. Probably going to get to this IB now. It would look like they're have some conviction after the lunch hour. Maybe they all had meat and they're mean. Be pretty surprising if they get within 2 or 3 ticks of it here and don't get that and all of those stops. But there's a lot of liquidity piling in there. I'm not sure exactly the thinking about that, whether it's a 5,500. I suppose it could be a strike and they're holding out for something. I don't know. Yeah, quite disappointing of myself. But that can also happen when you spend a long time looking at this thing. You get, or at least I do, get kind of desensitized or whatever else. So I go take a break and then come back, and my timing was just off. I walked in right about here and thought, was just queuing up stuff to take a short and fell off. So I held back. And that was, like I said, more than once I've made a mistake of walking in and seeing what looked like a good setup and opportunity and realized it was just chalked it up to FOMO more than it was really an opportunity. And in this case, it would have been very definitely an opportunity. The thinking being, once again, we pulled down through the mid, came back up over it, took out 143 stops, down, back again, only got 4 stops. That would signal exhaustion. There's no more fuel left up here. And boom, down she went. And that's what, when it moves like that in your direction, it's pleasure. I can't get into this high liquidity for the stops and the IB low and the overnight low. That's pretty interesting. And they got the developing low right down here on top of it. Developing value area low. Both POCs are aligned essentially. The full session and the current session, RTH. Yeah, Maybe they're going to go up and try it again. When you see a B-shaped profile like this, it's in the market profile world, they call that, well, here, market profile. There's a B-shaped profile. They call that long liquidation. This is a P-shaped profile, which they say is stops or short covering. So you've got short covering, and now they're all long, and then this is long liquidation. That's the theory. That's the theory. I need something to drink. I'll be right back. Now they're looking to catch a bunch of people that can't stand not diddling in the middle there, or that don't know that's where they are. Maybe. I don't know. And again, it's just my comments about the way I view the markets and the way I try to trade it. And there is no such thing as, well, that I'm aware of anyway, the right way, or most importantly, the only way to trade the market. All you got to do is look at all the people in here out there having differing opinions, and it's pretty clear. I will be shutting down in about an hour. I have to go make the school run, so I don't leave it on in past, when I will have no possibility to come back and interact with the market. I leave it on during the day so that I don't have to restart it, and I have basically a contiguous day. recording or live stream. And had I not been asleep at the wheel a few minutes ago here, I would have had a nice, rewarding risk neutral trade setup and execution down to 10, little past 10 handles. That would have been just pretty snazzy. Pretty darn snazzy. Trade management is just hypothetically, had I taken this test, scale, and then we come down past scale again, get down to something like this, you start to trade manage, and by trade management, bring the remaining stop just above the POC, for example, or above these swing highs. When this kind of stuff starts happening, I would probably tend to start scooting it up down here with my target being so close to my target. And that may be my problem, but that's what I would have done. It would have been about 11 points total-ish, somewhere in there. That's how I've done it previously. Last Friday was a good example of that. Pretty much perfect example of it, actually. Yeah, so here we are with that V-shaped profile, looking at another second inside day in a row. There's got to be some sort of stat about that, I guess. And still no IB stat. Still no IB stat. Imagine that. Just imagine. That's kind of days are kind of disappointing. That's like the first identified trade setup and potential that I've recognized today. Disappointedly did not take, but yes, my trading day anyway. I don't know about anybody else, but a lot of my days are waiting and watching. Certainly not gunslinging and video gaming. That's for sure. That's for sure. And this is no place I'm going to interact. Even if I had a suspicion that it was going to bust down and take those stats out, It's just goes against my plan and my self-imposed rules within my plan, and so not going to do that. Not going to do that. I'm going to go get some water, though, or something, because I stand here. Need to move around, get my blood going. And here we go again. Oh boy, oh boy, oh boy. Where are they going? Where are they going? Okay. Okay. 78 to 55. 23 points, huh? That's not exactly a stellar range. And now they're going to just keep dorking around over the top of the POCs here. I guess. I think this day is not going to be one for me. I'd say the opportunity that I recognized and missed or was apprehensive about due to my just walking back into the office rule was probably the opportunity that I would have normally taken. This is definitely not one. They go up and test a long held consolidation zipper at the POC and then trade a couple points either side of it. What kind of deal it messes. Yeah. Boop, boop. It's just sucker place. Retail soup, essentially. Man, easier viewed here, I guess. That's the day. And that 23.23 handle move. Range total. And now everybody's all excited. Ooh, double bottom. They're going to go down, take it down now for the IB. And they might well do that. It's interesting that all that massive liquidity that was living down here kind of lifted off. Yeah, depends on how you have bookmap cranked in or out, I guess. Yeah, they're just retail soup, boy. That's for sure. And, there are people who don't trade risk neutral trades, the concept like I have. There are people that I suppose there are people who do, but use maybe use closer stop and scale relationships. So these, 2-3 point moves, and there are guys or people, traders who are really fast on the trigger and have much more precise entry locations that help. But, if you're looking at this, what is that? Okay, so 62 61. That's a point. Not much range there. Trade down here, we got 58 half, 60 half. That's 2 points. So, yeah, sure. Us in the old days of scalping, that nobody was paying it, or I wasn't anyway, paying attention to the BPOC and all that stuff. And all of these things that I look at and talk about and think are so important now, but that's had no concept of statistics, trading as a statistical business, had no concept of positive edge or how to determine. Everybody talked about an edge, but nobody that I ever knew described, and I certainly didn't understand how an edge was identified and quantified. But I'm confident that I do now, and it's statistically, obviously. I guess maybe I was just too much of a old cowboy to know about that stuff back then. But, I don't think that that's the kind of trading that would be a good plan for me to follow for a longevous career here at this, and a positive, expectancy and good north trending P&L curve. Come on now. I'd say probably exactly zippity doo-dah is going to happen here. Maybe I need something besides that protein drink. Yeah. Yep. Yep. And here we go back up to the VWAP and mid as we come into the 2 o'clock hour. NQ has been more or less leading the way, and it is trading back up also. Well, again, as I might have mentioned, pretty sure I did, typically when price approaches VWAP or mid from below, they sell it. Those are real widely known, watched, tracked retail levels. I think probably they're available on every charting package, trading platform, out there. Ninja, Trade of 8, Quant Tower, I don't know what the hell all, Trader X, whatever they all are now out there, I suppose. There's a big one. There's some selling going on there. Speaking of selling it, and it's 64 to 61. So there is, or would have been, a viable short VWAP to POC, more or less a mean reversion idea, and because there was no obstacle in the way. So if you got, hit it right there, you were able to, I would have been able to scale about 51. Well, still wouldn't have worked. Still wouldn't be scaled versus neutral. So that's pretty tight. Especially when you stop and think about the idea of that whole trade stuff is those kinds of trades that are mean reversion, meaning they're reverting from an outer edge to the mean being the POC. So then where the hell are you going? I like to have a scale off ahead of there. And then have that be more or less a target that I can trade manage past and start and be looking lower. Like I'd be looking down here, but how many times have we tried that and not gotten any place? So, in the case of this hypothetical trade right here, if say we were short and right now you're still biting your nails as your full risk exposure. My trade risk neutral trade setup is a two lot package, however many of those you want to trade, but that's what you have to have with the similar stops. And in my case, it's 3 points stop, and then the first scale is 3 points positive, obviously, and the second one is double that, 8 points. But move that second target, no problem. And I realize moving that second target is inconsistent with properly vetting a trade for statistics, because you then can't say, well, how many times did I take a VWAP to VPOC trade, have a risk neutral, have a scale or a T1 target and a T2 target? Well, you can't look at that statistic because the T2 target's been moved around. So, there's that. I never move T1. I never move my stops. The only time I've moved a T1 target that I can remember recently is, T1 and stop is that and it wasn't the other way around. It was the T1 first and then associated the stop, because I had a real poor entry and I realized that my target was on the wrong, my scale was on the wrong side of a major obstacle. So I moved it back towards to the proper side, to the entry side of the obstacle, whatever that was, a point or ticks or something. And then I, of course, adjusted the stops similarly. But after the trade is on and the scale has been made, then, obviously I can move that stop, as I was talking about earlier with trade management, but I never move my stops outside of that. I never widen my stops out. Let's put it that way. I have only narrowed them because of where the scale, the first scale had to be, but I never widen my stops out, ever. And see how far that got. Now we're back up over the mid. And right at developing value area high, previous overnight POC and naked volume point of control and high volume node, and the point where I was kicking myself for not taking a short right over here not too long ago. But I don't think at this point in the game that might be the prudent thing to do. The NQ is rocketing skyward. So let's see if we go up and do the exhaustion again, as we did a minute ago. I often get a little gun shy about how many times can you drink from the well too. So you see the difference now at how clear RMT rearview mirror trading is. When you look at this, it's like, oh boy, that's as clear as a damn bell, right? I was thinking of taking that trade, but here's the exact same position or situation, and I'm extremely skeptical about it. So, it's also a different just now crossing over 1400. So, that last hour of trade is I'm not real good about that, knowing what to do in that in this context. Oftentimes this thing will just rip one way or the other because there's people getting out of positions and squaring up and all that kind of stuff, and I'm not real handy at this last hour. My favorite trading period, and I think my most profitable, if I look at, I've got a table on my journal that's number of trades by day and number of trade outlook or trade performance by day and trade performance by hour of the day. Very definitely in the morning. And I think that's just a function of probably a lot of people. Same thing, volume's kind of slowed down. Everybody's whipping and spurring first thing in the morning, and now everybody's doing like me, standing around yawning, and. What's up with there, jerk boy? Take a nap. Take a nap. You see what could happen here in this closing hour. Be interesting to watch how they deal with this zipper here they had. And the only time we've gone over this up here since we got down into this lower area got shut down around 69-ish. Now, what's the point? You know? So here's this consolidation. This little microstructure right here. It's the small version of the big one, big profile. Fractal, as Tom calls them. Matryoshka dolls, the Russian dolls, nesting deals. Anyway, how do you say that? And it's likely to blast through the roof, and take out that IB high. Very possible. Very possible. And as far as I'm concerned, that trade higher would be just a breakout and a gamble, because what have I got that says that's going to go higher? Nothing that I know of. I mean, there we were before it broke low. This time, was it a coin flip now or what? Up here we are to that 70 test, the previous value area high. Conceivably, there's an old market profile-ism that's, will they get accepted in value? They weren't very well accepted this morning, and that was rejected out of them. They spent all afternoon below it. Value meaning the value area from yesterday, and here a bunch of selling coming down out of there again. So, yeah, I don't know. 70 to 66, there was just that little bit there would have been a scale, but how the hell do you read that? I don't know. And doesn't look like the sellers got too far. I guess what this was stops from these guys getting all excited about going long. I don't know. Tea leaves, baby. Reading tea leaves. I am short. Too short for the NBA. Does that count? And this is likely, not untypical behavior in the last hour, the power hour, as they call it, a lot of people. And it could just rip right up towards that IB high and a new high of the day, that would be not unusual or surprising at all. Just to say this, however, higher in range open type, the stat that the IB high or IB low will be taken out in this open configuration of a trade set of 2005 days in the higher in range subset is 500. The IB high or low are taken out 560 days, 97.9% of the time. Now, the IB high versus the IB low. The IB high is 67.5% of the time. And the IB low, how low can you go where IB low is 60% of the time. So, there you go. Statistics, magic. Hmm. And I have to start thinking about shutting it down and going, shut it down. Bottom of the hour. If they do a closing swing move or some one of the that 1450 thing where it suddenly goes ripping, liquidity comes boxing in on both sides and the price takes off, that'll be interesting to see which way they take it. Now they got it up above the developing value area high, but they can't make it stick in the previous value area or the overnight high. They can't get above that with any consequence. I mean, they ran it up here a little bit in the morning first thing, but opening swing, if I'm not mistaken, that was opening swing trade, I think, wasn't it? Yeah, opening swing. Well, essentially it's opening swing high, low, and then up and boom. I don't know how you want to call that, but they got the high of the day in the VP and within the first 17 minutes. And they've been trading down here ever since. I guess that short across there was a nice one. If you were clever enough to grab that. So I think any long off this mid up is probably, actually, I think any trade for me this afternoon is from this point on is would be more or less just trying to justify a reason to take a trade. Okay, so yes, I can't sing. Here we are here now, mid, bang, 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 back and forth. Everybody get excited. Which way are they going to go? Long's on the hook, I wouldn't say longs are on the hook. I think the market is this, as I said, the B-shaped profile is long liquidation. Considered to be long liquidation. So doesn't look like much of anybody's on the hook to me. It looks pretty balanced when you stop and look at it, kind of. It's just doom, 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 doom. Around here, very little bit of, the only thing that kind of surprised me was the lack of excess or taper like you see up here, down here into the IB low, but nobody much cares whether I'm surprised about anything or not. I'm pretty sure. Now they might test that VWAP or the, I'm sorry, the mid here. The several levels were here. They've now got the mid is here. Overnight VBOC. Yesterday's VBOC. High volume node. Developing high volume node. Lots of stuff right there. Lots of stuff right there. That's for sure. Yeah. So I'm going to close the stream off at the bottom of this hour, and I will decouple my trading. I don't know what they call that. What they call this thing right here? Trade control panel, I guess, and so that I'm not tempted, and so that one of the cats doesn't jump up here and make a trade for me while I'm gone. And it's just, this is a real, would be a real, well, was a real difficult day for me to see an opportunity. There's the one that I did see and didn't take. I'm pretty sure I articulated or narrated that I was looking at that and then didn't. And now here we are back at a similar spot, but a different time of day. This is the spot I'm talking about. And we did this. I can't roll back there now and see it properly, but this little deal here where we got the exhaustion and the, and the tests, didn't get it. And it was in the direction of my assumption of context, etc. Now it's now there's been a lot of shorts in, and maybe they need to take some profit and get some of them squeezed out. So we'll see what happens into the close, but I'm not going to be monkeying with it. That looks to me like a FOMO deal, and I'm really trying to not do that, even if it's a momentum play that seems to be. I've done those a few times where you just take a momentum play in the close, and you just in fast and out, and basically a scalp. But that's not a vetted trade. I'm trying to be real regimented with the taking vetted trades, statistically significant, et cetera, et cetera. So this day will be a non-trade day. Next thing I need to do is decide whether I want to leave these non-trade days up on the stream or not. Can't imagine anybody in their right mind that would want to watch 6 hours and 16 minutes of the market with some narration on my part and no trades. I'm not sure that I would want to do that, to be honest. However, it is kind of handy if I want to do when I want to do a replay or something over the weekend. I can listen to my thoughts at the time because of the video and audio side here. So, yeah. Anyway. And so they're just trading over value. This is the value area from yesterday. I think I might have said this wrong earlier. This is the value area from yesterday, assuming that you understand that, what that means. Some people, for example, trend day doesn't really have a value, considered by most not to have value because, quote, price is looking for value. This, however, was not a trend day. This is yesterday. And there's value area. So we've traded right up to and tested it, poked through it once, and then we've just tested up to the value area high up a gazillion times and back down again. So they seem to be pretty happy with value where it is. And if you want to believe that, repair the profile story, look at where they built the volume this time. So basically we'd have this. Now, what that means, I have no clue. Or if it means anything, it's just humans looking for patterns. Anyway, I'm going to wind her up here at the bottom of the hour and start fresh in the morning. Or actually, I always bring everything back up at 1700, so I watch the E overnight get off to a start. And good night on February 6th, 2024. No trades. Have a safe evening.